So the guest we have on today's podcast is none other than Aditya Singhania. He is also known as the Simple Trader on Twitter. He is one of the most simple and not just that, the most humble trader you would actually come across. So he is based out of Mumbai and he has a very peculiar style of trading. So generally you might have seen us do straddle strangles, hold till the end of the day or hold for a very long period of time. But Aditya has a different approach. His usual holding period of a trade can be less than 15 to 30 minutes. So he usually tries to enter with huge quantity and try to come out of it as soon as he gets an opportunity. So Aditya usually over leverages. So it's a peculiar style, as I said. So he takes a lot of leverage, goes full quantity, and later as soon as he gets any kind of good decay, he is going to immediately come out of the trade. And he has been known to consistently generate returns of over 2%, and usually his trade gets done in the first half of the day itself, and if there is any opportunity which presents in the second half, he is going to take it. So today in this podcast he has shared his entire style of trading. So the reason why I called him is, even though he is over leveraging, he is ensuring that his maximum risk is always capped. So he is working with a VAR which is well within his limits, and he is doing a fantastic job. And let's find out from him how exactly we can try to get inputs from the way he trades. Hi Aditya, welcome to the podcast, and it's great to have you here on the show.
Thank you so much, Saket. Thanks for having me.
So Aditya, just to give a quick intro about this podcast. So in this particular podcast, we will try to learn how exactly we can start trading like Aditya. If some beginner is watching,
Sure.
how he can replicate the style of Aditya. So for which we will try to understand your trading style in detail. We will also try to understand the good, bad and the ugly aspects of your trading style.
Perfect.
Right. So Aditya, maybe we can start with a quick intro about yourself, how you got into trading and how you got into option selling, because everybody will have their own journey. Right. So how did you evolve your trading and how did you start doing what you're doing today?
So I started learning about finance very young in my life. So when I was 17, 18 years old itself, right, I used to read a lot of personal finance blog and everything, right. So after my graduation, I joined my first job in JP Morgan Chase, and later on I worked with equity research firm as an equity research analyst. So I have worked in corporate life for 3-4 years, and I was pretty sure that is something I was not looking for. Then I set up my personal finance financial planning firm 6 years back. And I was doing very well. So I am a hardcore investor. I used to read a lot about Warren Buffett. Luckily, I got a chance to meet Monish Pabra and some investors who are very famous also, right? So my career foundation was with, I was very lucky to meet right people, learn from right sources, right? So after that, COVID happened. Then I got a good investment opportunities also, right? But after 2021, once the rally was completed, right, I was looking for more opportunities because the opportunities in the market for investment purposes were very less, right? So I started searching is there a way I can earn some extra money in the market, right? That's when I discovered option selling, right? And the thing that interested me most was this is a business wherein I don't have to invest any additional capital, right? It is just my investments which are doing very well, right? And I'm a very patient guy. The long-term wealth is getting created, right? But now, in any business, we have to take a loan from someone, from a bank or something, and we have to invest in assets and everything, right? And we have to pay interest. But in option selling, I saw we can just pledge our holdings and we'll get the margin from the broker and we can earn some additional money, right? So this is something which interested me the most, and that's how I started. So I started learning with covered calls, and so it's like it's a strategy which is indirectly correlated with the our portfolio, right? It's a different thing. Sometimes covered calls also backfires big time, but that was the start. How we can learn about markets and how can we earn additional returns, right? So by then I started, and over the years my trading strategies has also evolved and everything, but that's how I started.
Actually, Aditya, so there are a couple of contrary things which I see in you. Like for example, when I speak to Aditya as a person, and when I see Aditya as a trader, so a lot of contrary things. So for example, like let me just tell you how I got to know about you. So like Ayush, who works with me, so he once told that there's a trader in Mumbai called Aditya, right? So generally he makes 1.5% within hardly matter of 15-20 minutes from the start of trading, right? But the thing is, when I was having conversation with you outside, so you appear to be a very conservative guy, conservative with your approach, conservative with your trading, right? So then I also get to see that okay, there is a lot of patience in you. But when I see your positions, so the entry what you make and the exit you take, so I feel that okay, maybe you don't hold it long at all. So you generally finish your trade in 20 minutes. Right, and also you go quite a lot quantity compared to what we do, right? So it's very aggressive with the total quantity approach, right? So what does or let's say when you sit in front of the screen at 9:15, what does it run in your mind? Like how exactly do you approach trading? How exactly do you analyze the market, and how do you start to build positions?
Okay, right. So see, first thing first, by nature I know ki, so my trading also evolved with time, right? First I started with overnight positions, right? And later on I learned ki my psychology is not for directional trader. So slowly I realized ki non-directional trading is something which suits me. And the main reason was that the drawdowns can be much less, right? So as you know, I am mainly an intraday trader, right? And I mostly do expiry trading. So at 9:15 generally we see ki there is a reason for me to start at 9:15. So first thing is ki I have been doing it since quite long, right? And there were golden periods in 2021-22 wherein there used to be there used to be a very huge IV crush in the morning, right? But with time certain things I am used to. The strategies have evolved a bit, and my means executions have changed ki 9:15 sometimes I might enter less quantity, sometimes I might go aggressive and everything. So as you know ki generally I like starting my trades at 9:15, and there is a reason ki I am just used to that kind of trades, right? There was a period between 2021-22 wherein there used to be a very big IV crush right at the open, and it was one of the simplest time to earn money from option selling also, right? With time the strategies have evolved ki I might have multiple entries depending premium behavior and everything, right? But if you ask me 3-4 things ki which I'll keep in mind before entering the trade is ki first of all, what were the premiums which I was getting the previous day. So suppose there is a straddle, so I mainly do intraday straddle and strangles, right? Now the previous day I'll just see what premiums close. So suppose I'm trading Nifty and yesterday the premium closed at 150 rupees, right? Now if premium opens at the first tick around 110, 120, we can clearly see that there has been sizable decay overnight, right? So already we know that the cream left in for collecting is quite less, right? So I might take lower position size and accordingly add in case there is spike in the premium. Okay,
so one question what I have here is, so maybe 2020, 21, 22 and all, the VIX was quite high. So after the VIX coming down, so do you see any challenges to this approach, because the premiums themselves are quite low? So any different challenges compared to that time to this time?
Yeah, there have been times wherein we have even seen 80 rupees, 70 rupees straddle premium right in the morning, right? During this time I used to take lesser position size, and there are times when I never used to trade also, right? Because see, market keeps on providing opportunities. It's not necessary that every time you have to trade, right? But we have also seen with such small premiums also sometimes beautifully money is also made, right? And market also gets spent sometimes, right? So generally whenever I see risk reward wise there is very less to capture, right? Then I'll take the position size, I'll keep it small. And so one good thing about low premiums is the hedges is also very cheap. So we can keep very close hedges, and accordingly we can manage the position as well. But I have always been, and I used to keep lesser targets for the day, right? Because obviously lesser points to capture. So that's
just I want to give a quick intro about you to the viewers, let's say, who haven't come across you. So Aditya has a very unique trading style, right? So what Aditya really does is he usually completes his whole trade within 15 to 20 minutes. So generally his entry is quite early, around 9:15 to 9:20. He will already be in the position, and generally by 9:45 he will be out of the position. And Today, what we are going to see or what he is going to share is what exactly runs in his mind during this time. So, how exactly he is entering, how exactly he is sizing his position, and how exactly he is going to take the exit.
9:15 to मतलब generally I enter around first 2 minutes, right? The trade. So mostly it takes around 15 minutes to 30 minutes, right? But there are times, so if I'm able to capture the DK in the first, then mostly I exit, right? But there are times I'll be grinding entire day as
Okay,
well.
okay.
because we have seen times wherein there is a big IV spike post entries also, right?
Okay,
And yeah, so that is the case. And even when I'm taking 9:15 entries, sometimes I get a good DK. If the risk reward is bad, then I might not take re-entry and wait for re-entries whenever there is spike or
So,
this
how
thing.
do you measure this risk reward? So, is
Right.
it only based on the premium DK or do you?
There are two things. One is the levels market is at.
Okay.
If I see there is support, resistance or something, and the second thing is, the most important thing is always premium for me.
Okay, okay.
कि suppose market is at a resistance, right, and I see मतलब there are chances of 50-100 point bounce, suppose, right, then I might take a bullish straddle or a bullish triangle, right.
So, what according to you is a cheap premium, let's say compared to the previous day?
Right.
What according to you is a cheap premium? What according to you is a good premium?
So many times we have seen ki at 1 o'clock, even 100 points far in Nifty, we are not even getting 5 rupees premium, right? So in no way I can see myself in a trade during that time.
So,
right?
is there any thumb rule which you use to measure compared to previous day? Like say yesterday, straddles closed at say 200 rupees.
Right.
So today, if they are opening below 20% or 30%,
so it also changes with time. So during low wicks it's very different. During high wicks we have even seen ki previous days se higher it's opening, right? But so it also depends ki, so see, I just don't see at particular day. I see ki in general during the week what has been the premium decay overnight and how generally the premiums have worked. So markets are never stagnant the same way, right? So during high wicks many times you are seeing ki post your entry the premiums are increasing. And many times there is steady decay in the market also, right? And I usually always keep a track of previous week ki all expiries ka, ki how premiums have behaved and generally how much has been the overnight decay. So I generally try to keep a track, right? But anything more than 25% decay, I'm in general uncomfortable, right? And also it depends, suppose the market has been bearish, right? And then obviously we know ki put side premiums will be much higher on the previous day. But suppose market opens with a gap up, then already we know we are screwed. We will not be getting premium because the put side will completely melt instantly, and if there is no call spike, then we know ki risk reward is bad, then accordingly I have to manage.
Okay, right? So maybe you can just start by sharing what are the technical, how do you start with the technical setup? So before moving on, I would also like to talk about the sponsor for this video, who is none other than First Talk. So First Stock is the new age tech broker, and their primary focus is to make trading and investing simple with a top-notch support. So we might be seeing a lot of brokers having small glitches here and there. In such cases, the first thing you would want is very good support. So you need the team to be responsive, give any resolution as quick as possible, and that is one thing which we have seen with First Stock. So their support team is very responsive and very helpful in the time of need. So that is the reason why we are sticking to First Stock. Even after 3.5 years, we have barely faced any kind of glitches. Not just that, they're also coming up with new and advanced platform mostly by the end of this quarter. So trust me, in terms of designs and usability, it is really top notch. You can also check out the broker by going to thefirsttalk.com, or you can simply click the link in the description below, open a free account and get 2000 rupees worth free brokerage. So make sure you hit the link in the description below and open your first First Talk account. With that, let's quickly move on to the video.
So Saket, today is also a special day wherein we saw a gap up of more than 3%, which we rarely see, right? So we got a exit poll results over the weekend, and today market opened with a massive gap up of more than 3%. So generally on these days, I generally keep higher risk appetite. On a normal day, if I'm keeping 1 to 1.5% risk appetite, I can increase my risk appetite to 2 to 2.5%, right? Or else, if I don't want to increase my risk appetite, I'll reduce my quantity on such days, right? Now I'll just show you my screen and I'll try to figure out how would I have marked my levels, okay? So first thing first, on the previous day, I would have already marked. I'll just look the chart on daily time frame. This will give me the broader trend of the market. You can clearly see that I just marked 9 and 21 EMA on the chart levels, and this I'll keep it across all time frames. Okay. And this is just to get a broad sense of the trend in the market, and if there is any trend, I don't want to be against the trend. Either I'll not be in the trade, or either I'll not be against the trend.
So basically the trend you're judging by the EMA.
So this is just to keep, I'm also an investor and I'm a contra investor. So this is something I keep in front of me. I'm just not against. I generally don't use any indicators per se. This is just to get a broad idea that the trend is there, and I'm not against the trend. So it's just that something is in front of your screen, then you will not go against.
Got it. Like a thumb rule.
Yeah. Okay. So because see, at times during the market we might keep certain biases, right? But if the market is showing something it's going against you, so I just don't want to be standing in the front of bullet train. So now what I have done is on daily time frame. So this was the all-time high of the market, which was around 23,100 levels, which I have marked, and this was the previous base of the market wherein market has taken support multiple times. So this is a broader range of the market, which was 21,800, right? Now the most important part is the previous day ka low and the close, and we can clearly see this was the range of the market for past 2 days, right? But now market directly opened with a very big gap up, right? So herein will not have the data, and above we don't have resistances right? On this particular day, first of all, I'll just wait for a few seconds or sometimes a couple of minutes also to see because these are election poll results and we might not know how markets will move, right? Once the market opens, we don't know the trend of the market. It might come down, it might consolidate, or it will keep trending, right? So on particular days like this, I'll just wait for a time to market to settle a bit more. Okay, so if you see on this chart also, now this directly has gone above, market opened above 23,100.
Yeah, the
right?
resistance.
Previous so this level is marked for me already, 23,000. Now if the market is bullish, right, it is clearly telling that it's bullish, right? Now this will become my support for the market,
right?
And which we can clearly see it acted also, right? It's already around 2 p.m. today, but we can clearly see in the morning tick. Now what I'll do is I'll go into the lower time frame and I'll show you. So suppose if we wait for market for 5 minutes, right? Now this is the daily time frame of the chart.
So broadly, after the first maybe 5 minutes, 10 minutes, I've only seen a
So in this scenario, first of all, what I would see is where is the market opening, and then what are the premiums, and if it makes sense to trade in the market, right? Suppose in the first 5 minutes itself, we can see that there is a candle of more than 200 points.
So today it would have been little risky for you to maybe...
Definitely, right? If today, if it would have been a nifty expiry, and in the first candle itself, I am seeing a movement of 200 points and market has opened with 800 points gap up, then if the premium is 200 rupees, then it's better not to trade itself, right? Now on such days, obviously the premiums are also much higher, right? Now if I am getting this broad range of the market, now we can clearly see that market took support in the first minute here. Now also I'll keep into consideration the 23,000 will be the round strike for me, right? Suppose so 23,000 will be the main zone below which if market goes, then the market will again come into the range and it will not be bullish anymore, right? So suppose I don't have any view in the market, I'll wait for some time and I'll take a neutral trade. Now wherever after the first 5 minutes only, I can clearly see the range of the market. Okay, this is the range. Suppose I'm taking a triangle, right? Then I might sell 23,000 ka call, and above this, I'll just mark this level, first 5 minute ka range ka candle. Okay, and I'll keep this also black. Okay, I'll just mark this with black, right? So the high for today is 23,340. The low for today was 23,075 around, right? Here, this is the first 5 minute ka candle which is formed. Now if the market goes below this, then the trend will start getting bearish and it will be confirmed if it goes below 23,000 for
Right.
that particular day, right? Again, if it goes below this, but it comes up again, then again the trend is changing on intraday basis. Okay. Now this is a broad trend. Now suppose I want to take a neutral trade. I don't have any view in the market. What I'll do is I'll sell the call about 23,350, so 23,400 something.
Okay.
And if I'm selling the put side pay, the premiums, it will be below 23,000.
So today, would you have gone bearish or bullish?
So today I would have gone neutral.
Neutral.
Because
Okay, in the first 5 minutes you saw, okay, markets can.
And in fact, I would be slight bearish if after the first minute itself.
Okay.
Now suppose, so see, what would have happened is that market is opening with a massive gap up, right? Only certainty I want to see if the market can trend or not, right? But I could clearly see in the first minute itself the market is coming down, and what I would have taken is the higher risk reward would be on call side, because the premium would have spiked because of massive gap up, right? Now in this case, I would be actually a bit contra, and I would have taken slightly bearish trade. Now, because the puts would have crashed first of all. Now suppose when I am taking a trade, I would keep the stop loss. Matlab immediately I would I am taking a bearish setup, because the risk reward is better purely only because of that. But once market crosses 23,350, again I would neutralize or turn bullish.
Okay.
So I am just getting a higher risk reward. Suppose I am getting 100 rupees premium on call side and 50 rupees, right? I am just making sure ki I am getting higher credit from the call side, right? But when the market premium of call goes to 120 or something, immediately I will turn neutral also, or else I'll risk off from the call side.
So basically then your overall exit would be based on the criteria of either the level being breached or target or stop loss being hit.
Right. Now, so most important thing for me is the MTM which I'm getting. So I'll see a trend, I'll see at the premium price, but at the end, if my MTM is hurting, then I'll not take the contra trade also.
Okay, I supposingly, let's say your levels are breached, but your MTM is not at hit.
Right.
So do you consider shifting the positions? Or
Yeah. Okay. Always the case, right? So at any particular point of time, I see my trade as a new trade and not as a trade I have taken.
Okay.
And if it makes sense to be it and trade, or else change with the market.
Okay.
So whatever is my MTM, right? So what I first try is I'll build an aggressive position in the morning, then I'll try to build a profit cushion. And if later on, if the trade is not making sense, then I'll exit. And then later on, if I'm getting again opportunity in the market, then I'll get aggressive again with the morning profit, and I'll try to build, and I'll keep the risk appetite of morning profit.
So you don't restrict yourself to the morning only.
Right.
Beyond.
Yeah.
So maybe let's say after you're done with the first trade.
Right.
So okay, we'll come to that later on, like what kind of opportunities you scout. But here, Aditya, let's say supposedly today you haven't taken the trade because you had to come here.
Yeah.
Right? So you take the trade, and nowadays we have started to see flash crashes towards the end of the day. So maybe 11 o'clock, 1 o'clock.
Right.
So let's say now you're going to cut it based on MTM or any levels being reached. So assuming the first candle itself, you see maybe first 5 minutes only, you see a big crash. Supposingly, it's a black
and it has happened many times in the past.
Yeah. So and assuming that you breach your MTM and you cross further, so how would you tackle it? So how would you ensure that
Right. So first thing first, so there have been days, in fact it happened in January with me, and that too in Nifty if I'm not wrong. In the first minute itself, I breached my risk appetite of 1%. So what I keep is daily basis, I keep my risk appetite generally at 1 to 1.5%, depending on how aggressive I have built a position. Okay? When I'm lighter position size, I keep it at 1%. If on higher quantity size, I keep it at 1.5%. And days like today, I would have kept 2 to 2.5% ka risk appetite. If I'm going with the entire quantity. Okay? Now there will be times. I have fixed risk appetite for the day, right? Suppose if I would have hit 1.5 or 2% ka hit in the morning itself, then I would have exited a trade and I'm done for the day. I'll not take re-entry. Today market is not behaving as per me. My view has also gone wrong and my risk appetite has also breached. Then I'll close the trade. Now again tomorrow I'll come with fresh approach. So yeah.
So in this case, Aditya, like one thing which I wanted to know, okay, like how you spoke about position size. You have already mentioned two factors. So one factor, what you mentioned, is the premium.
Right.
So I feel that okay, premium will also act as an important factor for you to decide your position size, right? So and you also said whether you see if there's a big gap up or a gap down, you generally like to go higher, right? So now assuming that okay, you are entering a particular position. So when you say this is my normal position, what would be your VR? Let's say when you say I'm going aggressive, let's say I'm taking a 2.5% risk on the aggressive day. So what would be your VAR? And when you're conservative, what would be your VAR?
So things have changed in past 2-3 months, right? Whenever I am having strangles, my VAR will always be more. Okay. So in 2021-22, my VAR used to be 15 to 20% as well, because earlier we used to take not as hedges, we used to take for margin benefit, right? So that was the worst case scenario. And as things played ahead, right, I used to keep around 15% ka VAR. I tried to, if I am at maximum quantity, right? Now if I am doing straddles, my VAR is 3% to 7%.
Okay, if you're doing straddles.
Straddles, yeah. So mainly it's kind of iron fly and I take close hedges. And in fact I'm liking straddles more than strangles nowadays because it's suiting. So thing is ki now recently we have seen ki there have been very big movements in the market very quickly, right? So I try to keep very close hedges, and in this term, so generally whatever is my monthly returns of 1.5 month ka return, that is my VAR. So I'm very happy in that terms, right? When I'm very overconfident, only then I'll go to 7%. So now generally what happens is ki whenever my VAR is 3%, my capital use in the account is very less, 20, 30, 40, 50%, right? Sometimes. So this is the major change.
So don't you think bringing the hedges closer, because I will tell you why. So when we were due to a lot of this spikes, right? So we also started to try some positional trading. So while we were trying out positional trading, we also thought, okay, let's try to keep the hedges closer. So one thing what we observed is even though the decay of the sell legs are happening, so at the equal rate, even the buy
hedges will decay.
So has it been the case that okay, you have missed out, or has it been the case where the opportunity cost, where what you feel is not really making up?
So it happens sometimes, so it's very hurtful when I'm doing straddles and taking close hedges, because suppose if I'm making 0.8% on a day, I have seen ki I have paid 0.5% in hedges additional. After, so I would have made 1.3% profit if I have not taken hedges, right? But thing is, I'm not seeing hedges as a cost, right? It's part of my trading setup. So what happens is during a movement in the market, I am able to hold my position. This is the main edge which I am seeing with hedges. That's why I'm started to implement.
So then what would be the exit criteria for Aditya? Let's say you have taken a position and it starts to, so we understood, against you we understood, right? So either the levels being breached, either your M2M being hit. So one of these would be your criteria. But what would be on the other side? So let's say things start to go in your favor, right? So when do you decide, okay, now I have had good amount of premium decay and it's time for me to exit one? Or when do you decide, okay, so now I'm in profit, but okay, what makes you feel uncomfortable? Let's say there might be a case where you have made 0.5%, but inherently you feel, okay, currently market is not looking good, maybe I want to exit. So what are those scenarios, or what are those levels where you look at it?
So there are certain things. So first of all, whenever I'm doing strangles, my target I generally keep between 0.4 to 0.75%. Okay. When I'm generally having straddles, then I'll keep higher targets as well, because I'm closer to the market also, right? And my positions are also a bit aggressive, right? So there I keep little higher targets, right? But I have seen in strangles, whenever I have earned more than 0.5%, right? Generally market finds a way to make me flat. Or even in red. I first try to book in the profit. So see, I trail it with multiple method. One is MTM based, then I can keep trailing stop loss on my MTM also, and also on level based. Suppose market is testing the resistance multiple time and I think there might be a breakout, I might exit the trade before and only because there will be IV spike after the move, right? So if I've already managed sufficient decay, then I exit this thing. So see, generally I see कि my losses, maximum loss is 1.5%, right? If I'm getting 0.5, the risk reward is not in my favor, but my win days are very high.
Got it.
So comparatively, I make profit on 70 to 80% of the days, right? So in my strategy, the risk reward is always reverse. Ki on losing days, I'll be losing much more.
Got it.
On winning days, I'll be winning much less, right? So suppose if I'm making 0.5%, 0.5%, 0.5%, that is 1.5%, right? When my position is very aggressive, that day my hard stop loss will be 1.5%.
Okay.
On when it is conservative, it will be 1%. So on particular day, it will be 2 days ka profit or 1 day.
So basically, you need to get something like 60%, 66%.
Yeah. And generally, I have been able to keep it above 75 to 80%, right? But there will be certain days also when I'm not making any profit. That will be 30% of that time. So now the thing is, this I have just told you on base rate ki this is the morning risk appetite, right? What I also do is now on profitable days, I look for re-opportunities in the market. Now from morning's profit cushion, I again risk the morning profit and I reduce my risk appetite on the this drawdown. To suppose I am taking 1.5% ka risk, now I have 0.75% ka profit in the morning. Okay. Now what I'll do is ki I'll take 0.75% ka, that is my profit. Now with that I'll try to earn additional 0.5, 0.25%.
So what kind of opportunities do you look for when you say additional trade? First trade is closed.
Right.
So now if Aditya has to re-enter his second trade. Right. So what is that he looks for in the market?
So 2-3 things I look for: support, resistances, the premium in the market, and then whenever there is a big movement in the market, right? So this 2-3 things, and sometimes I even do debit spreads also. If I see that there is very good risk reward. So if I see, I'll just look at OI, where are the positions built. So you will get a fair idea that whenever there is a movement, then there might be a lot of price action you will see in the market, because suppose 23,000 is a very important level and there is massive put writing, but for some reason if the market tries to break 23,000, right, there might be a very big panic and you might see a very good spike on the put side, right? So if there is a spike, then I look for re-entries and see if I can get some benefit, and I'll keep a very good risk reward, and that time I might even do 1:3:2 put ratio also sometimes if I am seeing ki this thing, or I might take a bullish straddle if I see ki the market can continue, and if I see ki there is a strong trend, then I might do a bearish straddle also.
So just to summarize the entire thing what you have said, right? So first you are going to based on the previous day's premium, how much it has decayed today, and the general trend, you are going to start building the position. So again here you are going to size your quantity depending on how comfortable you are, based on again the premiums, how much they have decayed, and how much is the gap up, and how the volatility in the market is. So now here you are going to, based on whether you are playing conservative or aggressive, so you are going to do a straddle or a strangle depending on the levels what you have marked, and based on whether you are conservative or aggressive.
And in fact, if you see today's examples also, I show you on the screen, right? So today the market opened around this levels, and we marked this levels, right, for the first 5 minutes. Then we saw beautiful consolidation, right? And here we would have made very good money, right? Now you can clearly see 9 EMA and 21 EMA also are trying to catch up, right? Market, and this is a major support. Market tried to break this multiple times, but now we can clearly see ki it's neutral to mild bullish, right? Market is not trying to go down, right? As long as this levels are not breaking, then I'll not be bearish in the market and I'll try to play this range, right?
Got it.
Now the market is beautifully consolidating. If I have a straddle, right, there are no reasons for exit. Only if I see the premium have completely melted, right? Suppose this is a range of 300 points. Now if the straddle price has gone below 100 rupees, then I would not prefer to be in trade, right? Obviously, or even 150 rupees for that matter, right? In 150 rupees at the center, now I'll be able to play 300 points ka range, right? 150 on the upside and the downside, right? So accordingly, I'll be trailing. Now market is trying to form tighter and tighter ranges, right? Now see, now what I would have done. So you can clearly see, now I'll mark this level also, right? So this market is in a very tight range of almost less than 100 points, okay? Now we can also see the price action wise, the market is slight bullish, right? Now whenever market tries to break this level, right, 23,260, I would have turned my position a bit bullish.
Got it.
Already I will be having a bullish trade here, matlab slightly,
Yeah.
suppose put premium I would have sold 50, then call premium would be 30.
So
or
now
something
let's
like
say
this.
by chance the DK
Right.
has come because slight
Right.
bullish move
Right,
is there
right.
from the time.
Right.
So and the premiums are balanced. So
Right.
you would exit and again go with a new premium making it bullish.
So it totally depends ki how is the range of the market. So if there is good premiums, then I'll always be aggressive.
Okay.
If there is less premiums have already decayed, I would be far from the spot.
Okay.
And yeah, but I would keep bias, right? Suppose if the premiums were very good, suppose I would have 50 rupees ka put and 25, 30, 35 rupees ka call. Now if the premiums are less, then I would be 15 rupees ka put and 10 rupees ka call.
Got it.
Just to give you a fair idea, right? Whenever I'm not sure about the range of the market or the volatility, sometime I'll just go far from the market.
Okay.
So that time I won't be doing strategies. When I'm sure about the range, like a particular day like today, right, market is forming a clear range, then I'll be preferring strategies because that will give me a very good profit also, and I'll be able to hold. Yeah.
So now Aditya, like the question I had was, since you have made it very clear with respect to your targets, your exits, right? So there is no doubt about it. So if you're aggressive, you go for 1.5%, sometimes 2%. If you're conservative, 1% loss, you take the exit. On the other hand, you aim for 0.5 to 0.8, and then you look for scout for other opportunities later on. So now, the question I have regarding this is, again, like as I said in the beginning, I'll try to extract the most out of this thing, right? So one thing which I wanted to know is, okay, how exactly is Aditya planning to scale this up? Like scale this up maybe going forward. So do you think, okay, this approach of yours is going to keep on working? If yes or if no, why?
Okay.
So which I want to know from your end. So the second thing what I want to know is, what do you think is the inherent risk, or what do you think is the risk with this approach, and what are you doing to maybe counter
mitigate
it?
So as you know, I started in 2021. I started with 50 lakh rupees with this approach, right? And slowly and steadily, I tried to scale this, right? After 1 year, dhire, obviously from profit also you can easily scale, right? With time. So currently, I'm doing this with 1 crore rupees. But there was a time I was doing it with more than 4 crore rupees as well.
So you're planning something like 3-4% a month with this?
Yeah. So it depends sometimes. So I keep risk appetite. My drawdown, I like to keep it below 5% almost. So historically, I used to keep 3 to 4% appetite. Now I have slightly increased it to 5 to 7%. Because I am getting a bit aggressive. So for strangles, 3 to 5% ka risk appetite is good. But for straddles, I have to keep slightly higher risk appetite of at least 5 to 7%.
So what would be the returns that you would be making?
So I would be targeting anywhere between 3 to 7%.
3 to 7. That's pretty
for strangles, 3 to 5%. For straddles, if I'm taking 5 to 7%, right? So April month was one of the best months wherein I also outperformed, which I was not thinking, right? So I made almost 12.8% net terms pair. Now May April was worse for most people. It was good for me. Now May I did one very big blunder, and May is now flattish for me. So one single day only one Nifty ka very brutal expiry, I lost more than 3%. That was the first time, right? So which happened. So this is generally the thing. If you have profit cushion, then I can risk, right? But in terms of scalability, I'll tell this thing. So I use external software also for executing the trades. Once you are scaling with my approach, so this is intraday trade, but this is kind of a scalping trade, right? Because you are always in action, right? So in API, if I'm using API of external software to fire the software, more than 7 to 10 orders cannot go in a single second. Now thing is ki market dynamics have changed quite a lot. In a single few seconds, you see a very big move in the market, right? So for my trading style, I face hurdles when I do it with more than 2-3 crore rupees. So, and 1 to 2 crores is the sweet spot for me.
Okay, okay.
And depending on the market dynamics, I keep on using this thing. Or else nowadays, what's happening is ki I'm keeping lesser amount only in my account of around 1 crore, because with hedges I'm already able to take higher risk appetite.
Okay, just to maybe like clear this thing for the viewers and myself also. Right. So when you say 1 crore, like what is the kind of size you go in Nifty? So would it be like 3,000 quantity, 5,000?
Okay, so with the naked strangles only we can go around 3,600 quantity approximately, right? So I go anywhere between, so for me 3,600, so without margin benefit is 40% of my sizing.
Okay.
Okay, so if I'm going naked, I'll utilize this thing, but I always go with hedges, right? So I'll be utilizing less than 40% of my account with hedges. So this will be my position size when the premiums are not very good, and when there is a crush in the IV, and I'll keep lower position size. Now during the market, so my quantities are very dynamic. Suppose if I see spike, I might have 5,400 quantity on call side and 3,600 quantity on put side as well. So I always also play with quantities. Either I have to match with premium, sometimes I match with quantities, and there will be times when the quantities will be double on one side also, right? So my quantities will always be between 1,800 when I'm taking trade for with very less risk, but generally 3,600 to even 10,000 quantity. Okay. So it will be depend. If I'm trying to squeeze out everything, it goes as high as 9 to 10,000 quantity per crore. Yeah.
So this makes a lot of sense, Aditya. Like the most important thing what we should take away from this is, maybe like let's say it's not about the quantity, even though you're aggressive with your position size, the most important thing I believe is the discipline. Right. So discipline to cut it off at 1% or 1.5% and making sure that drawdown is under 5%. So I think that is what is adding the edge here.
Yeah.
Right. So the thing is, like coming to discipline, and you also said that okay, you're inherently an investor. You started your this thing with investing. So again, like as both of us know, like in markets is like a perfect game because for option sellers, because you can sell the options on margin with no extra capital. So once you came into active options trading, right? So you understood that okay, there is money to be made in option. You can make 3, 4, 5% per month, right? So do you think anywhere it has affected your investing approach or affected your view towards investing, and now you're more focused towards this and you have left that as it is?
So we have rightly pointed out. So see, investing is very close to my heart and I extremely enjoy it, right? Trading, I started to earn extra money, but you are right, because of trading, because trading is time consuming. You take a lot of time, right? Not just the trade. After that, you have to analyze your trades. You have to see market dynamics changes, and you keep learning other things as well, right? So trading consumes a lot of time. So obviously, my investing has got impacted quite a lot in last 2-3 years. So specifically, direct stock investing has got because obviously earlier I used to spend 8 to 10 hours a day just doing research and everything, right? Now I'm spending 8 to 10 hours in trading, then I can just get a couple of hours, right? So mutual funds and all, I have tried to increase my exposure. So nowadays,
which is the mutual fund which you're actively tracking?
So there are quite a few. So obviously there will be some part will be index based, but I also like active mutual funds quite a lot, right? So I would not want to name, but if you want to know, Parag Parikh Flexi Cap is a very good scheme, right? It also caters to my international exposure and everything. But I am also very aggressive on mid cap and small cap funds also in that part. But I like Flexi Cap category because
even I would have a same preference compared
to. There are 2-3 funds which I try to keep track of, and there also I actually track NAVs of the companies and I know the fund manager ka approach. So at times I take when the fund is in fact underperforming and I'm very I like the approach of the fund manager, then I might take when they are underperforming, I might allocate much higher and hope of better performance.
So Aditya, like So since you told, okay, maybe like the way of investing has been
Right.
affected slightly,
Right.
right? So one thing, what you also said is now you're focusing more on the mutual fund.
Right.
But I also see, going by your tweets, right?
Right.
So mostly like your exposure is towards Kotak, HDFC, which hasn't performed.
Right.
So like I will want to know your approach because of two things. One, like when you see Aditya as a trader,
Right.
you know that he is quickly in and out of the position.
Right,
If something
right,
is not
right.
working, he's
Right,
out,
right,
and
right,
if
right.
something works,
Right.
right? So this hasn't worked for the last 4 years, and everybody knows that HDFC is a good management,
right,
Kotak is a really good management, right? So why haven't you? Okay, maybe after the management change with respect to ICICI,
Right.
So ICICI has started to get a lot of attention, and
Right.
it has done really well over the last couple of years compared to HDFC. So what made you stick to HDFC and not consider ICICI,
Right,
or for that matter something like Axis?
Right. So first of all, in general, I am very bullish on the banking space in general. It's a multi-decade story, okay? And when I was buying shares, so I don't like to sell them very frequent until unless if it's a part of investment portfolio, okay? I don't like to do very big churning, because whenever you sell a stock, you will pay long-term capital gains and 100 things are there, right? If I'm earning suppose 15%, if I'm exiting every year, my returns will reduce by 10%, but with compounding it impacts quite a lot, right? So, and in banking space, the management and everything is very important, right? Now there were certain mistakes which I might have overlooked because of time also. I was not giving complete to investing, right? But my philosophy was very simple ki India is going, GDP growth will be 6 to 7% rate, right? The banks will grow at 1.5 times this thing. And in banking, once I invest, if I trust the management, I don't have to think quite a lot. And in HDFC and Kotak, I also used to do covered calls and everything. Okay. So my investment is done. Now it's obviously against the holding, right? But obviously there have been changes. So main thing which got impacted is there has been valuation re-rating in the companies. So earlier they were trading to, so there are two type of correction. One is time correction, and one is price-wise correction, right? So you will see clearly the profit of the companies have more than doubled in the past 3-4 years, but the price has not moved up, right? But I am hopeful that with time it will grow, right? But here is actually the question you asked me previously also, right? So in fact, in large cap space, now I'll be taking majority exposure via multi-cap funds and this thing. I'll be taking very less this thing. With time, I'll be reducing my large cap direct stock exposure and I'll move to multi-cap funds, right? So underperformance was there on the large cap space. On small cap and mid cap space, I'm very good with investing, and then there I have conducted very good alpha also. I have generated. So going forward, see, large cap space, I don't want to invest a lot of time and energy in managing this thing, and there are a lot of unknowns, right? So my now approach will be ki I'll be taking majority of my large cap investments via multi cap funds only, and in small cap space I'll be getting aggressive on direct investing side. Yeah, so this is a major change which I'm making.
That is actually like even more or less even I have started to follow the same approach, like because while we are trading, right? So I have certain favorites in mid cap and small cap. Large cap I don't even see, and Parak is also Parak and Quant is something which I consider for my fund investment. So one thing which I wanted to know, Aditya, because you are a active investor, so I just wanted to know your rationale after HDFC and HDFC Bank merged. So valuation is around 11-12 lakh crore. Right. So maybe today after the up move, maybe 13 lakh crore. Right. So what I wanted to know here is, okay, so since you have already mentioned that, okay, let's say GDP is growing at 7%, so you are expecting 1.5 times growth with respect to the bank. So this is the largest bank, and when you compare others, they are either half, and if you go to mid cap, they are 120th, 130th, right? So what is the rationale behind having a very high exposure to something where you see no more exponential growth of the past 3 decades or past 2 decades, how HDFC has?
So I'll tell you my thinking when I invested, okay? So I am an investor who is very happy with 12 to 15% return per se,
Okay.
if it's happening. And I thought ki with covered calls and opportunistic when I am right, I can generate 4-5% more. So it will itself give 15 to 20% on this basis, right? For my holdings, and I'm pledging them and trading with them. So first of all, I don't want very high volatility in the portfolio, right? Now the thing what has hurt me a bit is ki they have not underperformed, but the index has outperformed, right? Now my trading margin should have increased and it has not. Actually, that is hurting me quite a lot, right? So in terms of this wise, it's working fine, right? Now, so the thing is ki see, even if you are investing in index, suppose you are investing 1 lakh in index fund also, right? 10% would be HDFC Bank itself. It's not that ki you are not investing. Now I'm thinking ki direct stocks pe whenever there is bargains, I'll take very small exposure in large cap space, and I'll move directly towards mutual funds, and directly in small and mid cap space, I'll be getting very aggressive, right? So I've taken, time and again, I've taken very contra bets, right? So the smartest person will also make a lot of mistakes in the industry, right? In HDFC Bank, there was Aditya Puri management change. In Kotak Bank, Uday Kotak happened, right? And there were a lot of other challenges also which came into the business. Merger happened, everything happened, right? So with time, market also makes you humble. So I have time and again taken very contra bets. In ITC, I was very aggressive, and it used to be 15-18% of my portfolio at one point of time, right? HDFC, AMC, I took a very big contra bet, right? HDFC and Kotak is something which is testing quite a lot of patience, but with time I'll be reducing allocations there also, and I'll be moving to mutual fund side. Yeah.
Got it. So I think with this, Aditya, you have more or less made the whole thing clear with your trading and investing approach. So how exactly you are planning to approach investing? So you want to pledge it and you want to go ahead with trading. So now I just want to break the flow and I will ask you some rapid fire, and post that I have some small questions regarding how you actually take a look at trading as a career today. Right? So let me start with the rapid fire. Let me pull out my phone this time instead of the sheet, which I usually do. Right? Yeah. So the first question what I have for you, Aditya, is okay. What do you think is the ideal capital to start trading today?
So you are speaking of full-time trading?
Yeah, full-time trading.
So it completely differs from person to person, right? But if I'm telling in terms of majority people who might be watching, right, you should not think about trading with less than as full-time with 25 lakhs capital. You should not even think about it. I'm telling. Okay. So reason being, suppose a person has 25 lakh rupees, right? Then he can, even if he is making 4% a month on average, right? It's 1 lakh rupees in real terms, right? A person who is taking and trading is a risky profession, right? So it does not make sense for anyone he might be no, even a normal person gets a job of 50,000 rupees in today's term, right? So it does not make sense you are taking high risk and you're only dependent on that part. But I would say everyone will come from different walk of life, right? For me, less than trading with 1 crore capital does not make sense. For someone even with 10 crore, it does not make sense. It depends on lot of factor. But I would say if you have at least 10 times your annual income, if it's your trading capital, then you can start thinking about it. Yeah.
So my second question to you, Aditya, would be if there was one advice you want to give to your younger self, right? So what would it be?
Younger self, you should be much more humble with the market. Otherwise, market will make you humble in ways you will not like, right? So thing is ki sometimes I start getting aggressive in the testing phase itself, right? I should not be in rush. So I would say ki be more patient in the market, and with time scale, not to scale too quickly. Yeah.
So now, considering your portfolio, so Kotak or HDFC your favorite?
So my existing investments are much more, but in this thing, I think it would be equal only, HDFC or Kotak. Yeah. But I like HDFC more as a business.
Okay.
But I think Kotak will grow much faster because it's a smaller bank compared to HDFC.
So next, mid-cap or fin Nifty, one thing which you don't regret trading.
I don't regret trading both indexes, but historically I've seen in FinNifty I have not made that much money. In fact, when I was doing data crunching, I saw that 60% of my losses in all expiries were from FinNifty.
Okay.
So midcap has treated me quite well. So actually I have not made money in FinNifty in last 1 year.
Okay.
In fact, I saw on net terms. So yeah, I'm very conservative in FinNifty and I'm very aggressive on midcap. So, but I trade both indexes. Yeah.
So the next question, Aditya, is okay. Does Aditya not prefer automating his trade?
So certain part of my trades are automated. So decision and all the entry exits are based on my discretion. But MTM based stop losses are automated because I don't want, because nowadays everything happens in a fraction of seconds. So exits are automated, risk management is automated, but the decision making of entries are done by me. Yeah.
Okay. So my last question to you, Aditya, in the rapid fire section is going to be: does Aditya consider to stop trading anytime in the future, maybe 3 years or 4 years later? Okay, I am done doing this for so long. Now I want to take a break from trading and only focus on investing, like how Jinjinwala did. So I'm asking this to you specifically because I know that you initially started as an from an investing background and you like investing more, right? So maybe it might have changed, but yeah. So would you consider it?
So honestly, I've considered this a lot of time, and maybe so for sure I'll be trading, but my approach will get much more passive, right? So I might so first of all, I don't know how long this expiry trading will work also, right? Or even 1 DT or 2 DT weekly expiries in general, right? In 3-6 months I'll get a broad idea, right? But as you already know, I have started to do a lot with monthly options also, overnight options also, right? But with time I might focus more on long term options with time. And I'll be focusing a lot more on investing for sure, because trading I'll keep a passive part of it. Then after a few years I might not even trade also. It completely depends if I'm seeing the opportunity in the market, right? And sometimes you can be out of the market for 1-2 years, then again you will see the opportunity and you can this thing, right? But and I'll also get into directional trades in future. A lot more future trades and all. Yeah.
So one thing, let me just jump onto the questions again, where like I want to ask about people coming into trading and all of that, right? So the thing is, whenever you talk to traders, like they will be making 3%, 4%. So people generally have an assumption that okay, making 1% shouldn't be hard. Right. So the thing is, people even with bigger capital who come into trading generally end up losing money. Right. So their expectation would be quite low. So they don't even expect more than 1% or 1.5%. Right. So what do you think is maybe, okay, you know for a fact that maybe they are not disciplined enough and XYZ. Right. So what do you think is the real challenge in trading which you have cracked, or maybe 3 successful traits of a good trader? Right. So which where I feel that okay, capital is not everything. Even people with bigger capital can blow up. So what is the 3 traits which has differentiated you from the remaining 90%?
So see, trading is honestly very difficult. Anyone telling you otherwise is lying to you, honestly. Okay? And the easy money, if you think you are getting from trading, then you might not be actually knowing the risk in the trade. And most people ignore the tail risk part. So if you are making money consistently also, you should know how much is a tail risk, and in case of black swan, what can you lose. And recent in the market also, we have seen with time, there have been lot of things which people have never considered as risk have turned out, right? Exchanges closing down in mid of the market, right? Recent black swan in USD INR, right? The complete market were bunkum, right? So there are a lot of things people have not considered. Coming to the part, if you ask for a couple of things which has worked out for me, is the most important part in trading is discipline. and to be disciplined and to be disciplined are very different things, right? We all know ki what are right things to do. Suppose for one thing I want to do in my life is to improve my health. Okay, for that there are only two things I have to do: eat healthy and go for workouts, and I'm not able to do both. Right? In trading is the same thing, right? You know your risk reward setups, right? But following that setup to the core and firstly finding your own edge is very difficult, and edge also keeps on changing with the market, right? And it's a constant evolution. What is working now might not be working tomorrow, right? So that is the most. So, and the third part is always learning. Learning from your mistakes also, learning from others' mistake also, and learning new things in the market also. Because always there will be opportunity in the market, and currently wherever you are getting the opportunity, suppose everyone is doing weekly expiries quite a lot, right? I think after few years, weekly expiries might not exist, but there might be opportunities in different segment, right? Wherein people are making very good money. Yeah.
So one more thing which I want to ask is when you see trading, right? So do you think trading is a scalable thing, or do you think trading is a thing which can be considered as a long-term option, or do you think, okay, at one point more than trading, like maybe you have to consider with respect to investing, because because trading end of the day is a very stressful career.
Right.
So you
For
sit
sure.
in a 9 to 3:30, you
Right.
sit, and it's not an easy thing. Yeah. So sometimes, okay, this why I'm asking you this is it sometimes strikes me also, right? So do you think 10 years later would I be doing this? I would be trading, but would I be trading so actively?
Right.
So yeah.
So as you scale, there are a lot more challenges also, right? So for my current scalping kind of trading, right, only with limited capital I can do also. Suppose I'm doing with 100-200 crores, then it's obviously not possible to do what I'm doing also, right? Even with 5-10 crores, already the challenges start, right? So first thing first, it's depends on your psychology. Second thing, key scalability की issues भी आएंगे with time with certain approaches, right? So trading, I might not be doing in future an option. I might be doing in cash segment, right? So cash maybe there are beautiful opportunities. First of all, everyone thinks about trading. So first thing comes to mind is only future and options, right? In fact, you will see most of the cash traders have made amazing money in the last 1 year. Right, many people I know 150-200% returns they have made and less than 10% drawdown. I'm like, it's much more better than F&O trading also sometimes, right? So for sure, I know ki I'll be doing a lot more cash trading in future. That is certain ki that thing is happening, right? Future and option, I might stop weekly options after a couple of years if it's not making sense, and I might move towards long-term options. My trading style will change, but I'll be trading, but I'll be focusing a lot more on investing.
Okay.
Yeah.
So I have last 3 more questions, Aditya, before we come to the end of this podcast. So the next question what I want to ask you is regarding the secondary source of income for a trader, right? So you come from a business background, right? So you will be maybe knowing the importance of the secondary source. So it's very recently that even I have started to realize, okay, we have to start working towards a developing a secondary source, because it's very hard to depend primarily on trading alone when you have fixed expectations and fixed commitments too. So right. So what would be your advice maybe for somebody who is starting? So how important is multiple source of income? And as a trader, how would, let's say, Aditya Singhania, how would he approach in developing multiple sources?
Right. So see, I think trading. So whenever a person speaks, he is a full-time trader, right? So many people get a wrong sense कि his only source of income is trading. So mostly what things happen is कि their majority of income might be from trading, right? But having a multiple source of income is very essential, right? So trading is a profession wherein you know कि there might be months wherein you are not making any money. In fact, you might be losing money also, right? Even if you are the most consistent. So drawdown will come. Drawdowns are reality, and there will be a very big time drawdown. Right, just assume कि suppose you are making 1 lakh a month on average in trading, but for 3 months you have not made any money, but your house expenses will be there, suppose 50,000 a month or something, right? So I would say कि always if you are considering full-time trading also, a person should have at least a source of income or passive income which is able to take care of household expenses. This with whenever a person is having a sizable amount of passive income which can take care of active expenses, you will never have pressure in trading. Otherwise you will have to think कि यार मतलब आज कमाया नहीं तो घर कैसे खाएंगे, right?
So how do you develop this source? Let's say a beginner who is starting today.
So first of all, it completely depends on your skill sets also, right? So apart from trading, suppose I already have a business, right, which I'm also actively doing. I have financial planning firm, right? So I was very good with finance and I like personal finance, so I had built this business, right? And later on I started trading, right? Someone might have rental income. Even in trading, right, suppose someone is pledging bonds, then it will give a very good cash flow of 6 to 7% government bonds, right? Then there are affiliate income. Someone is good at trading, right? Generally there is a hatred ki someone is selling courses or something, or someone is having broking income or something, right? But that are very good options, right? And it completely depends on your skill ki how you want to do it. I know people who are doing trading. Suppose a person is doing cash trading or even systematic trading, right? He does not even have to leave his full-time job. So generally a person is like, I know people who are earning more than 5 crores from trading, and they are on a package of 1 crore rupees. Okay. So there are people who have never left their full-time job as well, right?
So Aditya, actually, since you mentioned about courses, and I know for a fact that you have attended many courses, right? So because I haven't attended many, so I have attended only a few. Like whenever, like I have heard somebody say this is very good, right? So what do you think of this general course market? Why I'm asking you is, so is it the same way where people are doing just for the secondary source of income, or do you really think that these are worth it and you can extract some knowledge out of it? Everything what you have attended has taught you something new.
Right. So see, 90% of the cases, so there are almost everyone tells ki they want to help someone and excelling their trading and everything, right? But 90% people who are selling the courses are not making money, right? So they are not helping people, but in fact making it much worse, right? So see, anyone selling courses, there are very good ethical people also, but they are very few in the market for sure. Having that additional source of income is good if you can provide certain things and you can teach certain things, right? But problem is that someone might teach something which is working, but the other person might not have psychology to implement it also. And because I have attended so many courses, I can tell you like almost every Tom, Dick and Harry, whoever I think even was slightly good also, right? Because I don't want to learn 10 things from him. Even if he shares 10 things, only one thing I might be able to implement, and which will improve my trading, right? And this is something I'm investing in my knowledge, okay?
So if I may ask, whose style have you gotten influenced by most to do the kind of trading?
So honestly, if you see now paid courses, in fact, I have not learned from most people. In fact, most people I have learned from is free sources. In fact, in my early years, your videos helped me a lot, especially in straddles and this thing, right? Shreyas Bandi's video helped me a lot. Praful Bhai is there, right? His videos helped me a lot. In fact, I learned much more from them compared to paid courses, right? There were certain paid courses I learned, but it's mostly free sources I learned much more, and from making own mistakes I have learned.
Right, Aditya. So with that, we also come to the end of this, and I feel like the conversation what I had with you was like you spoke very honestly and openly about everything. Right. So I had a great time. I hope
same here, Saket.